Woohoo! All right, guys. We are in this week's update is going to be focused on pretty much one thing. Remember, we've been talking about specifically for weeks, but over the last few months, we've been talking about digital currencies, digital banking, opening up checking accounts via banking, online banking versus going into a branch, right? Well, this episode of breaking news so you don't break your bank is going to do a little deeper dive into that. There's a couple of things going on out there that is doesn't change fundability, but it does change what might be being loaned to you. All right, so let's break this down one by one. And I've got a link I'm going to share with you about a Federal Reserve white paper. MIT and the Federal Reserve of Boston, Massachusetts, basically did an article that it casts how it's called a central bank digital currency. Now, what do we mean by that? Central bank digital currency. Well, right now, the Federal Reserve has a bunch of different regional Federal Reserve branches, and each CEO, each director of those federal branches are all on the board of the main Fed, and then there's a Fed chairman that is appointed by each administration, right? So you've got all the boards, all of the seats on the board are reserved for the presidents of each of the regional Federal Reserve banks. So this is a white paper by MIT, which happens to be in Massachusetts, MIT, and the Federal Reserve Bank of Boston. And what they're working on is a federal digital currency. Now, a digital currency by itself doesn't mean much, but what a digital currency means, it's actually a payment methodology. Just like right now, you have Federal Reserve notes. Some call it fiat currency, etc. But you have Federal Reserve notes, cashola, that you can have in your hand. But if you deposit that cash into a bank, that bank converts it into a digital format. If you get a loan, you can ask for that loan in cash, but most likely you're going to transfer those funds digitally to other vendors to buy a car, buy a house, and all this stuff happens digitally. But what's backing those transactions are Federal Reserve notes, cash, okay? The fiat currency. Up until 2000, up until 1913, we were backed by gold, right? And so it was an extremely stable environment. Then we went to paper and this fiat currency, the actual digital currency, the actual paper currency. And now what's going to back what they're looking at is having a digital currency. So they don't have to print more paper to put it into the paper notes to put them into circulation. All of the banking reserves, fractional reserve banking, everything, what would be backing it would be these central bank digital notes, this digital currency. Now, there are some pros and cons, and I'm going to drop that I'm going to drop the article into this so that if you want to do a deeper dive to all of it, I'm going to post that right now. And what this article does is creates it explores the ideas. Now, they say it's going to be a while, but part of the motivation between all of this is that China, which is the largest personed economy, is also moving quickly into a central bank digital currency, which means that the digital currency will back. Now, it's kind of fuzzy, and I'm gonna bust it out here on my board because just using words may sound a little weird, but right now, let's say, Sky, I'm gonna change my I'm going to change my mic for a second because I want you to be able to hear this clearly. And go here. All right. So if you have a digital currency, and then over here, you have a paper currency. Right now, paper currencies. Now, let's say down here we have a loan, auto loan, mortgage loan. It doesn't matter. You have a loan, you have a line of credit, a business line of credit. When a bank lends you this money, they're using its back. That money is backed by paper currency, but it's in the digital form, right? It is a digital form. Digital, meaning it's just digits on a spreadsheet at the bank. All right. But a digital currency, there is no paper currency, so the loan is direct because what's backing it is not paper currency, it's the digital currency, and it goes straight to, so it shaves off 1 degree of difficulty in the lending process. But more importantly, what happens is this paper currency goes to the bank, and the bank delivers it digitally, and then it gets sent to us that way. Digital currency, they're converting, but right now what's happening is there is a speed move by China to offer a digital currency, okay? And they're already in implementation mode. Now, the problem is that if it's kind of first come, first served. Right now, the United States paper currency, the United States Federal Reserve note is the most stable currency in the world, has been done for years. For example, it's called the petrodollar. You buy American dollars and then you buy petroleum. Many, and there's more complexity to it, but I'm trying to make it simple. Many countries cannot buy like oil supplies, oil reserves directly from the oil providers. You have to buy American dollars and then you buy the oil because it's a stable currency. Well, right now, because in the formation of all of these economic policies, the United States has been a solid banking mainstay for 200 plus years. The fear is inside of the federal government, inside of the think tanks, the financial think tanks in banking industries, et cetera, is that if China does a digital currency first, it may become the new world currency standard because it will have more time to stabilize, et cetera. So there's a huge push right now for us to examine and implement digital currency so that the United States can still stay the financial juggernaut that it has been, right? The financial foundation of all currencies. China is already making inroads there, and that will, not only do they have the largest economy, the largest population, but now they could become the single holder or be the greatest source of debt instruments in the world economy. So what I wanted to check on with you is to just kind of review that banks will be able to build their own what are called stable coins that will have a significant relationship. Think of Bitcoin and as the first example of digital currency, but it's not backed by the United States government, right? Well, once we have digital currency, then banks will be able to think of it as customize their own version of digital currency that they offer their borrowers. So does any of this affect our fundability? No. Fundability is based on the borrower behaviors of repayment, balances, utilization, et cetera. So I don't care if you get a credit line of digital currency, if you got a business credit line of digital currency and you and you use 95% of that, it's no different than if you did a paper currency business line of credit. It's all the same. There are not going to be very many significant differences in what is backing the what's being lent to us. So whether it's Federal Reserve notes, fiat currency that's being lent to us, whether they're lending us gold bullion, or whether it's a digital currency that is the means to lending to us, doesn't matter. It's repayment, our capacity to repay, the process of repayment, and all of our borrower behaviors. I do not see, and this has been confirmed by my contacts at FICO and lender underwriting teams. They're saying it doesn't matter what we lend, we're going to base it on your borrower behaviors coming back to you. So I shared that link with you. If you'd like a deep dive into that, we'll be talking more about that over time. But I just wanted you guys to know that this is of the 7 articles that came into me from different trade rags, banking association newsletters, etc. There's like 5 of them. We're all covering what they're calling as they're calling it the CBDC. One more set of what do you call it? One more set of I want to say anagram. Hello. One more set of initials, BCDC or CBDC, Central Bank Digital Currency. More on that later. And for a deeper dive at Funding Hackers, come and join us. We're going to start our Funding Hackers Q&A live with me. So we'll head over there now. If you're not a member of the Funding Hackers yet, come to the boot camp. Graduate from the boot camp and join us at the Gold Pass level, and you get to join us in the boot camp as well. Love to have you. Get Fundable Boot Camp. It starts this Friday and Saturday. Oh my gosh, you guys, I cannot tell you, I have leveled up. I can't even believe the amount of refined and filtered information that I'm able to bring to you. So whether you're a member of the tribe or brand new, members of the tribe that are funding hackers, you get to come as part of your because you're a funding hacker. If you haven't been to the boot camp yet, I swear, you guys, it's going to blow your mind. It is must-see TV, and we'll be doing it live on Zoom for you to be able to attend. This is Merrill Chandler. I will see you on the inside.